The next panel is the panel about the European digital infrastructure. And I would like to get on stage Thijs Poorthuis, Director of NIBC. So,
thank you. Thank you, Stijn. It's Poorthuis, by the way, but but other than that.
Okay, I'll leave it to you.
Yeah, very good, very good. Well, thanks, Stijn. And again, good morning. Good morning, everyone. Very delighted to be here. You've seen this slide before. It was already up, so you've seen the faces. Nevertheless, I would like to ask Alex, Eugene, Jan, and Martijn to the stage to discuss the digital infrastructure in Europe and perhaps beyond. I'm looking very much forward to a discussion on this. Bye. Good morning. All right, let's see if technology is working flawlessly. Not yet. There's supposed to be. There we go. All right, very good. All right, I'll start off with a short introduction. My name is Thijs Poorthuis. I work for NIBC. I've been working for NIBC for 12 years. And I'm currently working in the infrastructure team at NIBC, mainly focusing on digital infrastructure. It's a very exciting time to be in a digital infrastructure team. Last year, this is only a selection of the deals that we did, but last year we closed 27 transactions all over Europe. We started off small, like most companies do, and with a focus on the Benelux, UK, and Germany, expanded to the Nordics a couple of years ago, and also last year we expanded to Southern Europe, so now covering France, Italy, Portugal, and Spain. And with everything that's going on in the digital infrastructure industry, it makes sense to widen your scope above beyond the, let's say, the cities and the regions that most people look at. And I think that's in line with what we've also heard in previous talks from, for example, from Alex in the opening keynote, which brings me to the next slide. Because we have here on stage a very diverse panel. Martijn, Blanken at EXA Infrastructure. We have Jan at APG, Alex from Eurofiber, and Eugene from Equinix. I could introduce them, but I'd like to ask them to introduce themselves with a brief summary of who they are and what's on their mind these days.
Okay. Yeah, Eugene, Bergen. I don't think we're that diverse. But maybe in the old way. Yep, that's true. I'm basically running Equinix. I'm with Equinix for 9 years, and we'll talk about it more.
Alex Goldblum. I've been at Eurofiber for 16 years, so I win. Seen Eurofiber, from the sort of startup phase all the way through to where we are today, operating in Belgium, Netherlands, Germany, and France.
And Jan Sipma, Senior Portfolio Manager in the APG Infrastructure team. I think we have a global infrastructure fund with 22 billion assets under management, of which 16 billion in Europe, and based in Amsterdam, and looking in that capacity also to various assets in the broader telecom sense, towers, fiber, and data centers as well.
Yeah, Martijn, Blanken, back in Europe, new kid on the block, 6 months into a new role as the CEO of EXA Infrastructure. Spent the last 17 years in Asia and Australia, and now at the helm of this company that is the result of a divestment by GTT of quite a few European assets.
Very good. Well, thanks. I agree, Eugene. There's something to be done about the male-female ratio, perhaps on stage. Let's see if we can work on that for next year. Right. First off, this is not very readable, but let me give you a try. We'll talk about the interesting regions in Europe, and in line with what Alex said before, we've seen there's a lot of focus, obviously, on the FLAP-D region, but there's other regions outside. He mentioned Stockholm, Madrid, Zurich and Warsaw. So there's a lot going on outside the regular regions. And there's also a lot of restrictions or other things hampering growth in certain overbuilt or let's say regions where there's also, but there's a lot of DCs already. Can you share on your views, and let's start with you, Alex, on where you see opportunities in Europe going forward for your company?
Yeah, so for us, I mean, we've talked about DCs. DCs are part of our business, regional data centers, but obviously we're a fiber asset company. So when we look at it in terms of fiber penetration. And what's interesting is everyone talks about Frankfurt from a DC perspective, but Germany is a massively underserved market from a fiber perspective. So we've just made a big investment into Germany. We'll be growing there significantly in the next 5-10 years, same as France. So they're the two very large growth geographies for us, in addition to our home markets of the Netherlands and Belgium. So not necessarily from a DC perspective, but from a fiber penetration perspective.
Yeah, and I think it's good that you mentioned that, but that's the interesting thing. That's also why I mentioned that we have a diverse panel here. It's more than just DCs. We have the fiber connectivity, and we need all that in order to have this industry flourish. Martijn, your company EXA is well, it's all over. It's US, it's subsea, but it's also pan-European. What's your view on developments in Europe going forward?
Well, actually, not too dissimilar from Alex's views, although our geographical scope is somewhat broader. We now focus a lot on Southern Europe and Eastern Europe, next to continue to invest in the sort of the traditional flat markets. Submarine is still a bit of a question mark how to play in that one. We're certainly landing a lot of cables, and we will continue to do that. But the model where one company outright owns a transatlantic or a long-distance submarine cable, I think are well and truly behind us. From a data center platform, we happen to own and operate a few data centers, but that's not the core of our investment. So it's mostly connecting the workloads wherever Eugene and the hyperscalers will take them. We follow suit. That's our role.
And if you try to make that more specific, where do you see, let's say, next or additional connectivity action on your side? Where in Europe?
Look, it comes down a lot to international connectivity. So a lot of new cables are coming in from Middle East and Asia. They tend to avoid Marseille. Still a few land there, but quite a few new ones will land in the south of Italy. So a lot of investment goes into there. A lot of it will do the west coast of France. And the Portugal area will continue to be an important area for those coming from West Africa and South America, as an example. Turkey is not part of the EU, and that comes with a whole, I think Eugene can say something interesting about it, but that means that those who want to put their workloads in Turkey, they will have to be physically, it cannot be served out of the EU. Yeah. So there's a lot of demand for connectivity going to Turkey. Maybe not in the next 24 months, but I think in the next sort of 3 to 5 years, there's a lot. And the quality isn't very good, so you have to start planning for it now and sometimes even do some civil engineering work to construct it.
Very good, very good. You already made the bridge a bit to Eugene. Eugene, what's your view on this? Also, in light of a lot of news articles on Equinix focusing on Africa these days.
Yeah. Maybe it's helpful to first explain that Equinix is connecting the world. Of course, the question is: are we a data center company with a network, or are we a networking company with data centers? And just to give you an idea, 90% of internet traffic runs through one or more of Equinix IBXs. That gives you a perspective of the connectivity scale of the company. And as a result, we are not so much focusing on the very large hubs, London, Frankfurt, Amsterdam, and to some extent Paris. But we're really looking at where is the world going to connect. And for that matter, we're looking at cable landing stations, Genoa, Bordeaux, Oman, and more to follow. So that's as far as the non-Africa piece. Africa, you probably have to stop me at some point because I'm incredibly excited about Africa. It was, and maybe I can enlighten some of you as well. If you realize that Africa is the size of the following countries combined, all of the Americas, all of Europe, all of China, all of India and Japan. That's what we're talking about. So it is a massive continent that is developing at a rocket speed. We have acquired a company in Nigeria. And why Nigeria? Because of Africa, South Africa is very substantial. It is the largest data center opportunity at the moment. But we started to look at Nigeria because it clearly is already a hub. And as I said, Equinix is looking for interconnection, the future of interconnection. And if you look at this company, main one, they are already providing cable landing. They're providing networks to surrounding countries. And that is really what drives our interest in the expansion.
Very interesting. Thanks, thanks, Eugene. Lance-Jan, moving to you. So what's going on in APG and what geographies are you excited about?
Yeah. No, we look really on a bespoke basis, case by case, to every potential investment opportunity. Obviously, the classical private equity attributes, the risk-return profile, client base, churn, what have you, the trends in the market of that specific country. So we basically invest where we see the right opportunity. We have recently invested, as you know, together with KPN in the Netherlands, in the FiberCo. We've also done business now in Poland with Orange Poland, which is very exciting. It's a very growing market. So we do see in Eastern Europe and Southern Europe, obviously they're picking up on the connectivity demand, and therefore lots of opportunities are there. But for example, also in Germany and France, we see incredible amount of opportunities that we can do from within the companies or as a new investment potentially. So lots of opportunities for us in the whole geography of Europe.
So good pipeline for you.
Indeed, and therefore for you as well.
Good. All right. Moving on with another unreadable slide. Luckily, I've seen it before, so we should be fine. Let's see. I wanted to talk to you about scale and reach. From a financing perspective, what we see companies coming in and they are getting bigger and bigger. Good example, I was talking to my colleague this morning. We financed Deutsche Glasfaser in 2013. It was a 75 million loan. They just refinanced with a couple of billion, and we see the enormous growth there. It makes sense. That scale helps you enormously to accomplish more or spread out cost over your network. Obviously, different ways of reaching scale or adding services to what you're offering. How are you dealing with this, Alex, within Eurofiber?
Yeah, I mean, it's an excellent question because it's multi-layered, right? So this example you just used is more around, or I would say it's a market opportunity that's driving the requirement for scale because in Germany, fiber penetration is very low. So they see an opportunity to have a platform and they want to go quickly. And there comes a financing need. From our perspective, scale, I mean, obviously there's a fixed cost element to it, but it's a lot more nuanced because scale without automation is nothing. So software is enabling scale massively, that much more so than it was 10, 15 years ago. So automation is a part of becoming scalable. And for us, for our customers, I mean, it's actually, this is a really nice panel because we've got these really big international connectivity questions. And then we go to the northern part of France with a local entrepreneur who has 4 locations and needs connectivity between those locations and doesn't have any. Yeah. That's scale for them. So scale can be interpreted on many different layers. From our perspective, it's just around the market opportunity. And as long as that's there, which it is, then we will continue to grow and we can continue to need more and more financing. Yeah, it's that simple.
Very good. Martijn, the company EXA is actually, if you will, moving in a different direction, especially if you look at it from a little bit a larger timeline, because it's a spin-off from GTT. So it used to be part of a bigger company. It's now more focused. How do you see scale and do you see further growth or consolidation as necessary in order to go forward? Or do you feel that the focus that you have right now is actually serving a better purpose for what EXA is offering?
Yeah, again, the 2 separate questions. So first, the matter of scale. I think every asset-heavy industry, like digital infrastructure, benefits massively from scale. Putting an additional load on our existing network infrastructure hardly adds any incremental cost to the base. Obviously, automation is very important, but it almost straight drops to the bottom line immediately. So from that perspective, driving scale, as in driving more volumes on your existing infrastructure, is very important. by connecting more workloads, either in Europe or from other regions through landing submarine cables. You get more load onto your network from other regions, will further increase the scale. The second part of your question was, do you think there will be more consolidation? I think, yeah, absolutely there will be, because it's a very scalable business. The question, of course, becomes who will drive that? And I think, yeah, ultimately it will be Laurens Jan and friends who, the investors, the private investors who will likely enforce that skill, because there's lots of cost synergies to be achieved if you put the similar companies together. So I think that will continue to happen.
Yeah, yeah. Good. So Laurens Jan, so we see the companies getting bigger, so I can assume that those investments that you as a sponsor or as an asset manager make are getting bigger as well. How do you deal with this, and what do you see going forward for digital infrastructure assets?
Yeah, no, it's a good point. I mean, we have within APG the flexibility to deal with different ticket sizes. We can invest, for example, between, call it €400 and above 1 billion as a single investment. And that gives us the opportunity to invest in different types of platforms and companies. And as Alex said, there's a different type of scaling play for every company. So, for example, within a certain company, we might look within national boundaries and we grow that company through that lens. Other companies might be more suitable for to build pan-European platforms, the likes of the company of Martijn. You can easily see consolidation play there, where you sort of do bolt-on opportunities and chip in additional infrastructure. But for that, you need big checks. And we're able to write those for the right opportunity. I think for us, there are multiple ways to expand. It's obviously through organic growth, getting additional penetration on the fiber project that we do, additional co-location on our tower cos, et cetera, but also through, as I said, bolt-on opportunities, doing small M&A from within the platform, and we see them as most value accretive. And I think those are the two main avenues to really drive growth in your platform. But in general, increased scale is paying off under the right set of circumstances.
Yeah. Yeah. Eugene, anything to add to this?
Yeah, I would like to start from a customer perspective. When I look at the sort of the ideal profile of customers for a company like us that provides a global platform, we look at customers and take them places. A great example is Ericsson. We had them deployed like 4 years ago in 3 data centers. Today there are more than 50. So it's clear that scale, for that matter, is absolutely crucial. We want to go where customers are going with us. So that I would say is number one. And very much to your point, we want to be a platform company, provide a platform on which customers can do their business. And for that matter, we are massively investing now in digital services, because we see that this network that today is still leased and owned by Equinix will all go virtual. That's why we have what we call Network Edge. And we also see that people start to consume all these services, including data centers, on an hourly basis. So that's why we have introduced Metal. And we see that shift moving very, very steadily. I wouldn't say very rapidly, good for all of us, I guess. But it is definitely moving very steadily. And then the last point, which for Equinix is crucial, is actually a game of nothing but scale, is xScale. xScale is a separate joint venture of Equinix with a Singaporean pension fund. We have invested so far 7 billion in 3 years' time. And what we're doing is we're building these very large data centers together with the hyperscalers. And you would say, why are we doing that? We're doing that because the hyperscalers continue to be very important magnets. So that means, for example, Microsoft, we have the highest number of on-ramps of Microsoft. And that means that we have to provide, part at least of a one-stop shop. Because ultimately what we believe is that if they indeed, to the earlier panel we had here, start to build more themselves, it is important that we are enabling them to do that with Equinix. And as such, continue to win the edge nodes, core nodes, and every other strong connectivity point.
Very good, very good. Thanks, Eugene. we don't know if it has changed, do we? Let's see. It did change, actually. Very good. Trends and threats in the market. So we've seen in the previous two presentations here on stage that a couple of things do come back, actually, which makes sense, which is, let's say, rising energy prices. Then we have a terrible war in Ukraine, putting even more pressure on energy. But even before that, energy prices were already going up. That's one, but there's also a, let's say, a supply issue, if you will, with skilled labor. But at the same time, we do see, fortunately, projections by CBRE and the likes that overall demand for data is growing. So we do see, let's say, trends going in both directions. Very much wondering on how you deal with the issues in the market these days, and maybe start with Eugene.
Yeah, well, you know, it's a difficult topic, to your point, because I think what is happening in the Ukraine is just horrible, right? And I've always said, you know, it reminds me, 20 years ago, we were a very ambitious team that wasn't Equinix for that matter, because, as I said, I was there for 9. And we built this massive spreadsheet where we said, now we can predict everything. And after 2 years, we realized we pretty much made the numbers, but for all the wrong reasons, or at least different reasons. I think the world has changed into way more unpredictable. I wouldn't dare to say where power pricing is going. I wouldn't dare to say where supply issues are going. And on top of all that, we also see that the talent market is becoming very, very tight. And frankly, I think that is one of the biggest threats we have. You have to imagine, if I look at just my region, we do now roughly a little over $2 billion revenue, and we are hiring literally per year hundreds of people. If you realize that the market of IT people is incredibly constrained, I think that is a trend that is very, very challenging for us. As a result, we have also designed a program where we actually help people from other industries. Now, because the pandemic has created a wave of people looking for different opportunities. And we have a program designed which is called Career Transition, where we allow people from very different industries to get into the Equinix business by a thorough training program, etc. But those are, I would say, those are the most challenging trends.
Yeah. Alex, how are you dealing with this?
Yeah, I mean that's a superb point, because people talk about talent, but the retraining, this sort of cadre of professional workforce that are already out there is going to be increasingly important coming forward. So I think, you know, when we're looking at both, we're also recruiting hundreds of people every year for the coming years. I suppose the difference for us is that we're looking very much, you know, we believe really strongly in this local entrepreneurialism. So every country has to really be driving its own strategy. And so there's a lot of local talent that maybe won't have floated to the top of the flap market technologies that we can then tap into, which is really exciting, because we've got some brilliant people out there who are under the radar. And we'll continue to do that, so we're not going to tell you who they are, because that's a really important part of our growth plan.
I think the two of you need to talk.
Yeah, no, we're definitely not going to talk. We will, not on this point.
We have the program ready.
Yeah, excellent. We'll license it from you. So I think that piece is an important piece. Taking a step back, you know, the question was on power. I mean, power, and obviously what we're seeing now is unprecedented. But we're talking about demand drivers that are driving fiber connectivity. And demand drivers there haven't changed, and they're only accelerating. So the demand for symmetrical bandwidth, low latency, is only growing. And it's not only growing between flat markets, it's growing everywhere. And if you think that fiber penetration is only between 5 and 10% in some countries, and these are big countries, you can spend 15, 20 years deploying fiber there and still be growing double digit every single year. You don't need to be following the next big trend between these international hubs. Yeah. And that's what we're doing.
Good.
Yeah, maybe from the investment perspective, it would be interesting to flag that the trend we see is that over time, we have been among the first with some other investors to invest in the telecom infrastructure, in towers, in fiber, and gain knowledge by doing so. And over time, you see that the assessment of risks has changed by the investment community, where first it were more the private equity, classical private equity funds that picked up these assets over time. That has been converted to the more classical pension funds like APG that invest in these assets and really embrace the risk-return profile, obviously with the consequence of compressed returns. So it's a very positive trend, but the risk we see, or the threat from that perspective, obviously is overpricing in the market on telecom investments. So we need to be extremely selective in what we do, and actually primarily we are looking to expand existing platforms because they're more value accretive than investing in completely sort of standalone new companies, although sometimes you have to get sort of the right exposure. So I think that is a trend we see, and so in a way it's a positive, but also a threat to us.
Yeah.
Yeah, not too much that. I think Alex made a very important point. If you look at the fiber dynamics, that is still portrays a very attractive picture. The demand continues to grow. A lot of traditional investors are pulling out. We're here in the Netherlands. KPN used to have an international network. That's now part of EXA Infrastructure's network because they can't afford to deploy the capital internationally. And a third dynamic, which is also important, compared to 10, 20 years ago, most fiber investments were made with all the risk upfront taken by the investor. Right now, most of the investors are shared with some of the hyperscalers. So the risk profile for us to deploy capital anywhere has shrunk substantially. So the opportunity is absolutely there. The second point around energy, the bad news is that the energy prices will eventually flow to the competitor. As every link in the value chain will pass it on to the next one, and ultimately we as consumers end up paying for it in one form or another. And that's hopefully a temporary thing because it's driving prices up everywhere.
And any issues with construction capacity or skilled labor for EXA?
Look, when we don't really construct fibers, we do that through third parties. To Alex's point, it makes no sense to have construction people on our payroll in Italy. You engage the local parties if and when you do need to construct there something. But yeah, the war for talent, I think, was there yesterday, is there today, and will be there tomorrow. Yeah. It emphasizes the point that most companies will have to have a compelling career development, training and development program in order to retain personnel, because people do not just want to be employed in exchange for money. They want to get something more for it. You're going to be talking about the ESG, or the purpose component is one, but also being able to develop your skill set is an important one. And without it, it's going to be very difficult to hire, let alone retain people.
Yeah.
Just to add to that, because a couple of years ago there was a lot of talk around civil contractor constraints. Yep. So physically, can you get enough people to deploy new fibre? And I think that industry's been amazingly resilient, because if you think about the number of deployments that are taking place across Europe now and even further abroad, they've done a very good job at scaling to enable that deployment of fibre. So I think it's worthwhile mentioning that, because often there's a perception that there's a real issue, and they've done a very good job as an industry.
Yeah. Well, glad to hear that one is no longer, let's say, on top of the list. So very good. So you mentioned ESG already, and it's indeed something that also as a bank we look at. We sometimes provide financing with, let's say, ESG-linked margins, for example, to stimulate let's say, movements or changes in the right direction when it comes to ESG. Are you familiar with this? Are you seeing this as a useful tool, or do you feel like there's something else needed in order to, let's say, boost the changes toward a sustainable future? Maybe.
Yeah, you know what? So we all have an incredible challenge, right? And I hope we understand what the challenge is. The challenge in my book is that, as the previous panel said, it's a lot of emotions. People hate data centers. They see them as fuel-guzzling monsters. But what I tell people is, if you're prepared to switch off your internet, we can talk. Which means we have an incredible challenge in explaining. That's number one. Let's be honest, we concentrate all these separate deployments in enterprises into areas where we manage the consumption of energy better than anyone. for the simple reason that it makes our margin. The less energy we waste in cooling and anything else, it clearly improves our margin. So I think that the number one challenge is that we have to explain the market. The second one, I think, is equally powerful. We are building data centers for 20 to 30 years. And anyone who thinks that we can continue to do that without thinking about tomorrow and what the environment is going to ask us, you know, you can write your resignation letter, right? Because you will not survive. So to us, those are very natural forces that are making this a top priority. And as the previous panel said, we are now looking at PPAs, etc. But let's be honest, you know, I can say that Equinix can claim legally that both USA and EMEA are 100% green. Asia, we're at 80 to 90%. But what does that mean? It means we have big wind parks, but we're selling the energy to the grid. So what we have to get on is to become really green, and that's a revolution. That's a lot of innovation. And that's my third point, I would say. The role of governments is absolutely crucial here, because you want a level playing field. If an interaction or any of us are going to invest in green, and it would mean that you, to your point, that we have to pass on some of the cost. If the others decide not to do it, then eventually that company will no longer exist, and we haven't made any progress. Yeah. So now I will say it's not going fast, but we are, Alex and I, Alex is CTO of Interaction, we are at the table in Brussels, helping to define these legislations that are coming out, the regulations that are coming out this year. Is it still this year? And that means that whether we like it or not, we have to change at a pretty rapid pace. So I think the letter with the EU is a really positive step.
Yeah, very good. Would like to add anything?
I mean, I'd just like to, if I may, because what's really exciting, I mean, if we turn this round, employees want this. Staff want to be part of, and you come back to the purpose discussion, staff want to be part of a company that's doing good. And we launched our ESG program a couple of years ago now, but the number of good ideas that come, you know, power's one thing, okay, but what do you do with your vehicle park? What do you do with sustainable sourcing for your food? What do you do with how you're running your office? I mean, all of these elements, people participate, they want to share ideas. And so the fact that the banks are now saying, listen, you know, we'd also like to understand what you're doing, I think is only good, because it sort of reinforces his message that everyone thinks is important. Yeah. And yes, there are some serious nuts to crack. I mean, and I've spent a lot of time in Brussels, and things, you celebrate very small successes there, and the challenge is then it gets translated into national regulation, and does it actually mean the same? And so I would focus on what can we do ourselves, because we can change that tomorrow. And the fact that the banks are now saying, you know, we want to have some sort of ESG back as KPIs back into the financing is only a good thing.
Yeah. Yeah.
Yeah, maybe briefly from APG's perspective. I think ESG is at the heart of what APG is doing. And how we, from the infrastructure team, try to influence that is by doing direct investments. So we're basically investing directly in a company without management, without a manager in between. So we have that direct representation in the company. And it helps because together with management, you know, post-acquisition, we're implementing a 1-2 year plan to bring up companies at sort of best-in-class level in terms of environment, governance, compliance, and everything in between. And I think that really starts paying off. And it's really important for APG to have investments only in parties that really want to sort of ride along that wave. Because really, as I said, it's at the heart of what we do. And I think it's also important for people working actually in those companies to have that, to embrace that type of sort of, you know, new element, which is important for companies. So, yeah, that's basically how we approach it.
Very good.
Maybe two very quick points to add. I think we touched on it, both carrot and stick. I think it will be very difficult to come by equity or debt without having a proper ESG program in place. So you'll have to do it, but there is a carrot. It provides a purpose to the company. And secondly, obviously ESG is a lot more than just green. The whole governance piece. I think all of us are dealing now with the situation in Russia and if the amount of emails that have been floating around, which customers are you serving in that area, and employees asking, do we want to continue to serve these customers? Do we want to provide aid, humanitarian aid? And then you get discussions, well, if we do it in the Ukraine, should we also do it in Palestine or in Syria or for the Uyghurs? And these topics, in some cases, in all honesty, we just don't have a clear point of view, but it does trigger the right conversation that I think will happen more and more.
Yeah, very good. Very good development. I've received a sign that time is almost up, but there's one more question that I wanted to ask you. 2 years ago, my colleague Arno de Ridder had a similar question like this, asked every panel member where they would put 100 million to use, and that was a panel on the Nordics, so it was was somewhat different, also a different figure, 100 million, 200 million. I thought multiples have gone up rapidly. There's a lot of inflation, so let's just write a bigger check and see where the money goes. Starting with you, Eugene.
Yeah, for us, it's not so much which country. And if I would think of any country, it would be the Ukraine, because they need it. But if I look at digital infrastructure, as I said, we're putting a tremendous amount of effort in developing digital services, basically to provide a total solution together with partners to our end customers. And partners in this area are extremely important. About 50% of our total business is going through partners. And the big benefit of that is they help us build total solutions. But the investment is actually, I would say, in digital services and in partners.
Would it be in Africa as well?
Of course.
Yeah.
We already did.
Alex.
You told me not to say I'm going to carry on doing what I'm doing. So I'm going to invest in mining asteroids. Energy, very dense energy, get it back down to Earth, solve a lot of problems.
Sounds
a bit difficult, moonshot.
Let's talk about that after the session a bit more. Laat Jan.
I like it out of the box. I think we would, as said, we're trying to focus really primarily on expanding the existing platforms to the extent possible. I think I would put the 200 million euro in one of the existing companies we would have, for example, TDF in France, to expand, for example, on ancillary services on top of the towerco and fiber service that they already provide, because there we see real value, really fit the client needs, et cetera, et cetera. So really sort of organic growth within the company rather than investing in a new company.
Very good.
Yeah, look, I think for most of us who are backed by infrastructure funds, the question is not so much what would you do, what are you doing? And $200 million is really not that much. Since we completed 6 months ago, we've already allocated $150 million, and we barely get started. So there is a lot more capital than there are good projects to invest in. I think that's the biggest challenge, to find the right investment opportunities. But currently, a lot of focus for us goes into Southern Europe, Italy, Spain, and Greece, Turkey. But I'm sure that if you ask me the same question 6 months from now, it may have shifted a little bit.
I might do so. Well, thanks very much. It was a pleasure to have this panel with you. Not sure if we have any time left for questions from the audience, but if so.
He says no.
Says no?
He says no.
In that case, I'm going to hand over to Stijn, and thank you all very much. Thank you.
Dank jullie wel. Thank you very much. Thank you panel. Thank you everybody for attending and on the panels. A great start of this morning program. The afternoon program will start at 12:30. All the input from CBRE is also in our Outlook report, which is provided, and they are spread around the conference room. And now it's lunchtime, and that lunch is provided by Iron Mountain Data Center, so very happy about that. Thank you very much, Eric. Have a great lunch, and see you at 12:30.